everybody? It's 7:30. We're going to start on time.
You quit on time?
That's the intention.
Oh, come on, you got 30 seconds.
Come on, you're right on time.
So, every time I make any announcements these past few days, I kind of have to laugh and say, I would extend you a warm welcome, but maybe not. Let's have a coolish welcome.
Absolutely.
Provide a little relief from our season of hot. Anyway, thank you for being here. I really like this committee. I like the things we talk about, and I like the fact that people show up. So welcome. Today's kind of our mayor is here. Welcome to the mayor. Today's kind of an all Jeff show, in quotation marks. So he assures me that we will be on time at all possible junctures. And I want to say thank you to Jeff for, I don't know how many years, a lot of years of outstanding service to the city of Golden.
Why is he dying?
Right.
No, I am feeling, no, here's a true confession. I just woke up feeling extraordinarily grateful, so why not, right? Why not?
Well, thank you.
How can you have too much gratitude? Also, thank you to Alex
Yes.
for his extraordinary work in getting all of those pages to us, and that was a lot of pages. Thank you to Stephanie for being here and for the excellent work that you do. To our mayor and to the other members of City Council for the work that they've done choosing our new city manager. Looking forward to his presence with us in September. Who else? Anybody else? I guess that's it. Yeah?
Are we going to sing Kumbaya now?
Everybody hold hands. Now, y'all.
No, thank you.
Gratitude is not a bad thing. It's a good thing. Plus, we live in the city of Golden. I mean, best place in the United
I will
States.
say on the way in, we've got moose on South Table,
Oh,
cruising
wow.
right along 58, so
Thank you.
where else?
Wow,
Right,
that's cool.
right. So,
Matt, don't.
yeah, but do you want to sit at the table?
Oh, sure.
There's a chair here. And thank you for reminding me of your name. I've been working hard to get my brain sort of organized around the new names. Now, I shouldn't say new, the most recent names.
In the last 12 months.
Yeah, in the last 12 months. Okay, is that it for the good of the order? Yeah. And I noticed that people have moved around today. Marv, you're not in your
I'm
usual
going to be
place.
leaving a little bit early,
Okay.
so it'd be easier to exit from this
And
side.
Bethany, you're not in your usual place either.
You want to see it, sir?
There you go. Here's to new perspectives. Okay. First order on the agenda is approval of the agenda. I'm assuming that you've all looked at it. Any comments or questions? I'd entertain a motion to approve the agenda.
So moved.
And a second? Second. Okay, thank you. Second item is approval of the minutes, assuming you've had a chance to look at the minutes. Any comments or questions? Motion to approve?
So moved.
And a second?
Second.
All right, great. So, the May sales, use, and lodging tax report. Jeff?
Thank you, and thanks for the kind words. And we're going on 20 years that I've been here.
20 years.
December will be 20 years.
Awesome.
You get a watch.
I hope not, because I don't wear a watch.
Maybe a new iPhone, right? There you go.
Sales tax and lodging tax report. Yet again, I am pleasantly surprised on just how much we are up compared to the prior month. Price increases, inflation, all of those things play into it, but people are still spending money, obviously. And from a sales tax perspective, we're reaping the benefits of that. One thing, if you look, let me get the right page. The page 3 graph,
What's it called?
what's interesting there is especially during the height of the pandemic in 2020, sales from outside vendors like Amazon and Wayfair and those kind of things were really driving the increase and sustaining our sales tax base as much as anything. In 21, sales from outside the city were up 32% compared to 20. And they were good in 20 because they were helping sustain during restaurant shutdowns and all of those kind of things as well. Outside vendors are only up this year 9%, when as a whole, we're up 15% year-to-date. So it's more sales inside the city limits that are driving the increase now. Restaurants are up, hotel accommodations are up, general merchandise places like Kohl's and Duluth and that are not driving this increase, but they're improving. But it's a lot of what's going on inside the city at this point that's driving the larger increase. So sales from outside the city are still good. People are still buying through Amazon and stuff like that. But people, and we know just from the traffic, pedestrian traffic and all of that, people are coming to Golden, people are hanging out downtown, and people are spending money. So we will continue to take that.
You're looking, that's the one that shows the different categories where it came from, right? That chart?
Correct.
When it's online, or you're still putting it into individual categories versus out of state or out of area, or?
Well, it depends on where the business itself is located. So for example, because we have a Kohl's locally,
Right.
unless, and I don't know, Steph, you may know for sure, but unless there is a separate Kohl's online account with us, sales through Kohl's would be considered general merchandise inside the city through the corporate center geographic location.
So where would like Amazon go?
Amazon would be considered outside because they do not have a physical location in Golden, and their sales go through.
Is it generally general? I was in the categories, so it's like usually general.
Oh, Amazon would be general merchandise.
Okay.
So we have the type of product
Yeah,
on
and
one
the
graph, and
location.
we have the geographic location
Thank you.
on that other graph. And then use tax continues to be up as well, not as significantly, but still doing well. Audit revenue, we're doing well there as well. The other thing, and I'll just plant the seed because we will have to see how this plays out on the lodging tax. But when we went to the voters, we were required to put a cap on first-year revenue from lodging tax. And the cap that we put on the ballot question was $2 million. So it is very possible that based on the lodging tax receipts so far, we could get close to or potentially exceed that $2 million cap, which if we get to that point, we either have to refund money in some fashion, or we potentially might look at a lodging tax holiday in December, for example. So people who come and stay here in December don't pay the lodging tax, to make sure we stay under the cap. Which arguably is a better way to do it, because if you go over the 2 million, who do you refund the money to?
Right.
If you refund it to the hotels, they didn't pay it, and they're not going to turn around and give it back to their customers. It's just going to be a windfall for the hotels.
Yeah.
So probably the more appropriate thing, if we think we're going to exceed that $2 million cap, is to have a, like I said, the lodging tax holiday during the holiday season.
And that's first year only.
First year only. After that, we are able to keep and spend whatever it generates. But that first year, we had to have a cap, and we were estimating closer to 1.8 million at the top end, and that's why we rounded up to 2. but I think hotel prices have gone up as well, just like everything else. And so we're very possibly going to exceed that $2 million. So just a FYI, and we'll have more conversation in the fall, I'm sure, about this.
I actually have a question, and then I'll call on Jim. But this goes back to sales tax. I'm sitting here wondering, so Amazon doesn't have a bricks and mortar, location here in Golden.
Right.
What about a place like, and forgive me if I'm outdated on this, but Yeti, where they're taking orders and maybe shipping goods out of state or out of Golden? Do we get that sales tax?
No.
So it goes to wherever wherever the person lives, or the end of.
Tax is essentially destination sourced.
Okay.
So if you go into Yeti Cycles and you purchase a bike and you take it with you that day, the sale took place at their store in Golden. Golden tax applies. If you, let's say you live in Lakewood, you go to Yeti, you purchase or you order it or whatever, and you may even pay for it, but you have it delivered.
Yeah.
It's that point of delivery as to where the sale is finalized. So Lakewood tax would apply. If you
Okay.
ship it out of state, then it would be incumbent upon them, depending on volume of sales, based on the Wayfair Supreme Court case, whether or not they have to collect out-of-state taxes and remit those to that state.
Yeah. And to be clear, that's what I thought it was true, but I thought revisiting the question was appropriate, I thought, so, yeah.
That's
And
fine.
Jim?
As an alternative to tax holiday, could this money be put in the grant program that falls underneath the city manager, that we've had chances of this subcommittee of this group had chances to divvy out the money? So that would have, the sense of the ballot question, I believe, and keep me straight, was we gave direction where that money might go.
I would have to confirm with the city attorney, but I believe that would be looked at as the city retaining it and using it, and we are not able to retain for the first year above $2 million in lodging tax revenue. So I don't think that would, it's a great thought, but I don't think legally it would be allowed.
And if similarly, DDA as an arm of the city wouldn't be allowed to.
Correct.
get this. Okay. It almost have to go to a nonprofit, and then that would get really sticky.
Well, no, it basically, if you go over the 2 million, you basically have to refund it, which
Yeah,
is
I know,
a
but-
different concept than running it through a grant program and giving it to, and that's why I'm saying the holiday is probably the better way to go, if we get to that point.
Okay. Other questions? Yeah, Bill?
I just had a quick question, I may have missed it. If we take somebody like Kohl's, do we ever get a breakdown between the online purchases and in-store? Or no? It just all goes on?
If it all is submitted under one account number for Kohl's, it's combined.
Okay. So half of it could be online, we just don't know that.
Potentially.
Yeah.
Unless we audit them or unless we ask them and they voluntarily give us that information.
Other questions or comments? Okay, thank you. Now,
All right, Alex, can you pull that up? Thank you, sir. I didn't change the date on this, just as a reminder that originally we were going to talk about this in May, and here we are, July. I also purposely moved this up in the agenda before the annual report and the financial report, because this may give you a little more context as we talk about those things.
and do you want questions as they occur?
Yes.
Okay.
I think it's a lot easier if, as I'm going through this, if you have questions, let's, bring them up then. If I'm going to cover it at a later point in the slides, I'll just tell you.
Okay.
And hopefully you've had a chance to look at these, because I really don't want to read them to you. So, go ahead, Alex. So, finance department within government entities, our primary job is to ensure proper and appropriate use, to collect what's rightfully due the city, which is why we have an audit program, for example, and why we pursue those things. Again, expenditures, proper and appropriate use. And accurate record keeping is huge, and that's why we have annual audit from independent outside auditors and compliance with a lot of stuff. And just on the compliance side, real quick, those of you who went through Leadership Golden when Dan Hartman presented, if you remember, Dan was famous for saying, I always ask Jeff if I can just have the cash on January 1st and then give him back anything that's remaining on December 31st. And that's how he would prepare or prefer to run his department. Obviously, we can't do that. There's a lot of rules and regulations as to how we have to account for things and track things and ensure, internal controls and all that stuff. So, Dan's wish for cash on January 1 just never happened, it never will. Go from there. So, a lot of basic duties within the finance department, huge laundry list there of stuff that Stephanie, and our staff do. Most of it is done by the staff, and Stephanie oversees the vast majority of it. I do handle the investments, and the primary for debt management, work very closely, Stephanie and I, on financial reporting and budgeting, and we work very closely with city manager's office on the budgeting piece, and then obviously with council as we go through the budget process. So, yeah, Peter.
Question. You gave this presentation a number of years ago, and at some point will you be highlighting things that have changed over the years and changes that you anticipate that might affect the presentation?
Yeah, not a lot has changed.
Okay.
But there may be a few things here
Yeah, I know
or there.
lodging. they
Yeah,
have a lodging tax,
lodging and
et cetera,
marijuana,
et
for
cetera.
example,
Sure, right.
are brand new
Yeah.
as far as taxes we collect. But yeah, if something clicks that this is different, I don't necessarily remember what I said 7 or 8 years ago last time I did this.
Plus,
But not,
accounting doesn't change that much.
Not
GAAP has
a-
been GAAP for 50
Well,
years.
that's-
yeah, not a lot has changed.
Yeah.
Okay.
So, the biggest thing with
Just debits and
governmental
credits.
accounting
Doesn't change.
is the not-for-profit perspective. Obviously, private enterprise is a for-profit business. They are accountable either to the company, the business owner, or stockholders, things like that. At the city level and government, we are accountable to our citizens and also to our bondholders that buy our debt. Those are the primary people that we are, responsible for and accountable to. There's all these different things as far as rulemaking and oversight, GAAP, GASB. GASB is Governmental Accounting Standards Board. They do all the rules and regulations that we have to comply with. GAAP, Generally Accepted Accounting Principles, that's the general basis for accounting. GFOA, state statutes, and our city charter and municipal code. So we have a lot of things that, require us to do things a certain way. So the biggest thing, and some of you may remember this or may be comfortable with this, but fund accounting, as you've gone through these quarterly reports in the past and maybe looked at the annual report, you see, for example, we have a general fund, we have a water fund, wastewater, golf course, community center fund, so on and so forth. The best way to describe for me fund accounting is consider each fund has its own separate checkbook and its own separate set of books, its own balance sheet, its own revenues, its own expenditures, and the checkbook has to balance. So when we move money from one fund to another for a variety of reasons, we have to make a balancing set of entries. If you're familiar with accounting lingo, we have to do a debit and a credit in both funds so that each fund still balances. And then the other thing within government accounting is the fees we charge for the various services we provide have to be proportional and relational to the cost to provide that service. It doesn't have to be identical, but there has to be a valid relationship. So for example, when we charge permit fees for building permits that we issue, that fee has to be relational to the cost of the permitting process, the staff, the inspections, all the stuff that's associated, the plan reviews, all that stuff that's associated with submitting a building permit. Those fees have to be relational to the cost to provide those services. We cannot overcharge for building permit process in order to generate money to buy a fire truck or to hire a police officer or stuff like that. There has to be a relationship. And we have to, it's been challenged in court a long time ago, but if it were ever challenged, we would have to demonstrate that relationship in such a way, and again, like I said, it doesn't have to be one for one. It's okay to accumulate a certain level of reserve, but it has to be reasonable. And so we keep that in mind as we set fees and as we look at costs. And part of that reasonableness and accumulation of some level of reserve is if we have a downturn in the building industry for 6 months or a year or whatever, we can still afford to keep the staff that does the building inspections and the plan reviews and processes the permits. And if it was strictly a one-to-one, then we'd be looking at, okay, how do we pay for these people if we have a downturn in that segment of the work that we do?
Does that include enterprise funds like fossil and stuff like that?
Yes, and I'll get to
But I
talk
mean,
to
that
that.
same, it's not demand supply. It's
Well,
pricing, is it based on?
It can be demand supply to a certain extent. It still has to be reasonable.
Okay.
And we can demonstrate reasonableness in a lot of different ways, and I'll talk more about enterprise funds in a little bit. Okay, so the other thing, there are different fund types within governmental accounting. There are governmental funds, proprietary funds, which are accounted for more like a true business enterprise, both enterprise funds where the customer is outside the organization, internal service funds where the customer is inside the organization, is the city itself, and I'll get into that a little bit more too. Governmental funds, the main difference there is those throughout the year we maintain those books on what's called a modified accrual basis versus a full accrual basis, which basically means that governmental funds are during the year accounted for more on a cash basis than accruals where you have a lot of timing differences and things. And that's all technical accounting stuff. Anybody wants to get into that, we can talk later. And I'd be happy to talk about accounting and accrual, modified accrual, and all that.
How do you treat the reserve in this context?
Each reserve is assigned to its own fund as well.
Okay, so they maintain separate.
We maintain separate reserves. And that's why we have a fund balance policy that addresses appropriate levels of reserve on a fund-by-fund basis. Because what's appropriate as a reserve for the general fund is totally different than what may be appropriate for the capital projects fund, based on need and the inflow, outflow of funds and all of that. So again, separate checkbooks, separate set of books. Each fund has its own reserves and reserve policy.
One question.
Yeah.
As far as the reasonableness of the collection of, let's say, fees and et cetera, is that all set internally? Or do you go outside to other municipalities and look at what they're charging?
We do fee analysis and comparisons with other entities. that doesn't necessarily drive the bus, but it is, we do look at those comparisons. Reasonableness is in the eye of the beholder. And as long as everybody is comfortable that we're being reasonable, everything's good. If somebody's not comfortable, reasonableness could ultimately be in the eyes of the court. And you never know what their definition of reasonable is compared to ours.
Isn't that the
I have a
truth?
quick question. On special revenue, I could guess what that is, but can you tell me what it is?
We'll get to it.
Okay.
We'll get into specifics of those things. Okay, so that was a general overview. Okay, general fund. Primary revenues are sales tax, use tax, property tax. We do have some fees for service within the general fund, but the premise for the most part is the primary functions of our general fund are things that are supported by tax dollars. And we are not, for example, public safety. We're not currently at a place where your house is on fire and the fire truck pulls up and asks you if it'll be cash or charge. Yet. We're not there yet. But there are places that I think to a certain extent do that, maybe other countries and that. But we're not there yet. Our tax base is sufficient to cover these primary and what I term, for the most part, historically core local government municipal functions, which is public safety, public works, maintaining our streets, parks and outdoor recreation. So, for example, our parks are free to everybody unless you want to specifically reserve a pavilion or reserve a portion of a park to guarantee you have access to it at that date and time. They're open to everybody. And we maintain the parks with tax dollars because we're not charging people to use those. We maintain our public safety departments, police and fire, with tax dollars. We maintain our streets. We plow the snow, do the minor crack seal type repairs and stuff like that, street sweeping with tax dollars. The bottom one there where I've added, and this is something relatively new, is what I'm terming social and environmental, affordable housing, homelessness, sustainability. Historically, sustainability is kind of borderline, but affordable housing and homelessness activities historically are county functions, not city functions. But over the last few years, council has determined that we don't feel we've received sufficient service from the county and the need is greater than what the county is providing, and so we have taken those tasks on. Historically, those are not core municipal functions, but moving forward, I think there is a shift that those are becoming more of a core municipal function, or at least the expectation that city government is going to take care of these things. So that, to go back to you, Peter, that is one significant change. Okay, special revenue funds. Oh, sorry, Jim, go ahead.
I think it's important for new people on CBAC to know that the county has not debruced. We're one, I think, 2 counties in the whole state that have not debruced. And that's an important factor to consider, particularly in that bottom line thing there in social environmental. The county cannot afford to do what they would normally do. They're like 17 million under budget.
Well,
I mean, under needs.
And I'm not going to go into a big dissertation about county government, but I will share that county governments are dysfunctional by nature. And the reason for that is take city government, take the city of Golden. Every department head is accountable to the city manager. In county government, you have an elected treasurer, an elected sheriff, an elected assessor, an elected coroner, whoever else is elected. Those elected official department heads are not accountable to the county administrator. They are to a certain extent independent of the county commissioners as well. There is not a lot of oversight and check and balance once, for example, the sheriff, once he gets his budget for the year, he more or less has carte blanche how he spends it. There is not a lot of accountability. And that makes it potentially very dysfunctional because, for example, I am aware that the sheriff's department has its own finance people, its own HR people, and its own IT people. The county as a whole has a finance department, an HR department, and an IT department. So there is a certain level of duplication of services, and with that corresponding cost for service that is going on within the county. So when the county says they don't have any money, arguably they're just diverting it in inefficient manners more so than they just don't have money. And that is just a function of county government compared to municipal
So the
government.
county is under budget, have they been under budget for a long time?
I don't know if under budget is the way to put it.
I'm sorry, over budget, sorry.
They do have revenue restrictions because of Tabor, but again, it's the inefficiencies in how they spend their budget that's the
Right.
issue, in my opinion.
Okay.
So, anyway, I don't, like I say, I don't want to go too far down that path.
I just asked,
But-
we might be expecting them to push more services, funding of services our way,
Which is very possible, and that's part of why we have taken on affordable housing and homelessness.
Right, yeah.
The other thing I will tell you is for 2022, Golden property owners are paying roughly $15 million to the county in property taxes, and I have serious doubts that we're getting anywhere close to $15 million worth of services from the county within the city itself. So, question, and then we'll get back to, we'll get away from our county diversion.
Right. Is this true of all of the counties in Colorado, or some more efficient than others?
The inherent dysfunction because of structure is true pretty much across the board. How individual counties manage their money can differ county to county.
Okay.
So,
But the inefficiency is because of the structure of who people are accountable to, right? I mean,
That's
it's
the
kinda like
dysfunction.
Dan Hartman asking for, cash in hand, well,
But the
they don't
county
have
level-
anybody to say, no, that's not how we do it.
the
Wrong
finance
analogy,
department
wrong
or the
analogy.
county administration can have a policy
Right.
in place. That doesn't mean that the elected official department head is obligated to
Right,
follow it.
Right, so it's accountability
Yeah.
that isn't in place.
Which, again, is part of the overall general dysfunction of that. Okay, special revenue funds. Within the city of Golden, we have historically had a conservation trust fund, which is a state requirement if we accept lottery money. We have to have a conservation trust fund, and that's through state statute. We also have the Golden Downtown General Improvement District, which has a dedicated property tax, and that is for parking, lots, garages, improvements, maintenance of parking, all things parking in the downtown area. And now just recently, we have added a lodging excise tax and a marijuana excise tax special revenue funds, even though we're not yet collecting marijuana excise tax. Karen?
So the DDA also gets a piece of the property tax, but that's separate, completely out of the,
The DDA is, and we're going to get into accounting vocabulary here and all that, the DDA is considered a component unit.
Okay.
It is not, the DDA is not a direct part of the city of Golden. It is a separate but related entity that has its own property tax as well.
right.
But it's not part of the city of Golden, even though we do the accounting for the DDA, just as a matter of efficiency, and because Steve Glick is acting as basically the executive director of the DDA, and so there's enough relationship there. but the DDA is not a part of the city of Golden itself.
Right, and the DDA collects a little bit of property tax, but only from the folks that live within the DDA boundaries.
Property owners
Property owners within.
within those boundaries. They have their own separate property tax. Okay, let's go ahead and move on. Capital project funds, we have several of those. The primary one is our sales and use tax fund, which has a dedicated 1% of our 3% sales tax rate. One of the 3 cents goes straight to sales and use tax fund for capital projects. And we do a lot of different things within that fund, including debt service. When we issue debt for capital, we repay it through that sales and use tax fund. We do a lot of infrastructure improvements, public art, fire trucks, fire equipment, other capital improvements. You've seen the CIP in the past. That laundry list is very huge. What all we can accomplish with that 1% dedicated sales tax. Also within capital projects funds, we have go ahead, Alex. We have a separate, what we call capital programs fund, and we use that strictly for street improvements. And the reason why we maintain this as a separate fund is we receive highway users tax money from the state, and there are very specific requirements of what we can use that money for. And so the easiest, and we have to report back to the state what we did. The easiest way to demonstrate compliance with that is to have it in a separate fund where the only thing we do in that fund fits within the criteria of that user's tax, even though that user's tax is not even close to being enough for the street improvements. And I do see, I have an error there. The basic revenue stream is the highway user's tax and then a transfer from the SUT fund, not the general fund. There were times in the past where we did use general fund money to support our street improvement program, but for several years now, we have only used money from the SUT fund and transfer it. So again, we move that money out of the SUT fund into the capital programs fund so that we have enough money overall to do our street improvement program, but we do it in a separate fund so that we can demonstrate compliance with the highway user's tax. And we're not required to do it that way, but it's very clean and very easy to do that. If we had the highway user's tax in the SUT fund, we could still demonstrate compliance, but it potentially commingles, muddies the water whenever you commingle funds. So it's just cleaner to keep it separate. We also have an open space fund. The county has an open space sales tax of which we share a proportionate amount of that on a monthly basis. And so again, the easiest way to demonstrate that we are using the county open space tax that we receive in manners that are legally acceptable is to maintain a separate fund for that. So we know how much money we get in. I'll get you in just a second. We know how much money we receive from the county in open space tax, and we can demonstrate specifically how we use it, because that's really the other than maybe some open space grants occasionally and interest on that money, that's the only revenue source for that fund. Yeah, Kathy?
Yeah, so when you have sort of overlapping needs, like for example, open space, you've got county money coming into a fund, you've got the lottery money coming into another fund that you talked about, and it seems like there's another state something that goes somewhere. Is there a way to combine these for decision making, or do you actually fund separate things in the different funds?
Because we keep the funds separate and the checkbook separate, we fund different stuff in different funds. And the way we do that is we look at what is the most restrictive fund first. And so for parks, recreation, and open space related expenditures for capital, this is on the capital side, the most restrictive fund is the open space fund. Second most restrictive is Conservation Trust. The third, which is not restrictive, is the Sales and Use Tax Fund. So when we have parks and recreation, open space related projects, we look at, okay, what falls under the purview of the open space fund that we can afford to pay for out of the open space fund, and we put those projects there first. Then we go to the Conservation Trust Fund. What can we fund out of that that is allowable within those parameters? We fund that second. Then we fund the balance of those projects out of the SUT fund, all the while prioritizing those projects against everything else at the same time. Karen?
No,
No?
I'm just elevating.
Just elevating, okay.
Where do you escrow these funds until they're dispensed for use? I mean, is there any yield or return that you guys?
Oh, yeah. Yeah, that goes back to the investments line within the finance department functions. We pool all our reserves for investment purposes, and we invest in treasuries, agencies, commercial paper, corporate bonds, based on ratings. We have a local government investment pool where we put money that is more liquid but still earns a better rate of return than if we just kept the money in Wells Fargo. And we maintain an appropriate amount in Wells Fargo, which is our primary bank, for cash flow purposes, money coming in, payroll, and other operating expenses going out. Yeah, Chris.
Sorry to go back, just a quick question.
Sure.
Under special revenue funds, the Conservation Trust Fund and the Golden Downtown Fund, those have special purpose, it's like special functions.
Yes.
On the lodging and marijuana, clearly the source, we know where that is, but is there a dedicated use of those as well?
Yes. That was part of the ballot questions. And we're still working through specifically what we're going to pay for. But for example, the lodging tax was for a certain percentage for tourism and visitor-related expenditures or capital that is a result of tourism and visitors impact. And then the balance of that would be projects, unique or special projects that we would not ordinarily be able to do.
Okay.
And we haven't necessarily identified all of that, but that was the basis for, in the ballot question, how we would spend lodging tax revenues, for example.
And what was the marijuana?
Marijuana we're still working through.
Okay. It's not restricted yet.
Well, there are restrictions, they just haven't been specifically identified yet.
Okay.
Yeah, Karen?
Now I do have, this arm says I have a question.
Okay.
So, on the lodging excise tax, since it is a certain percentage is to be dedicated to visitor impacts and things in the community, could some of that money be contributed to the visitor center for its role in meeting the needs of visitors coming into the community? Since they're looking at a capital improvement plan with...
It could be.
Would they need to apply to the city?
There would need to be some sort of communication on some sort of a request, and it would be through the budget process that it would be evaluated, or through a council process that, yes, we would want to do that. Right now, for this year, and we don't know for sure what all the total costs are going to be, but that tourism visitor impact, that portion of the lodging tax is going towards All Things Creek Corridor that we are doing this year, to see how that works, how much it's going to cost, how well that controls what we're trying to control, and all of that stuff. So
We're not controlling well.
That's, depends on who you talk to. Some people were overreaching, some people were not doing near enough. It's another one of those, we're never going to please everybody. So we are trying to find the right balance, and
It's very difficult.
that's what we're trying to do in many cases.
Without looking it up, would Guiding Golden be a place for folks to go to sort of look at the deeper dive on the marijuana and the lodging tax?
I don't know to what extent we have details on that yet.
Okay.
Other than what the parameters of the ballot question were.
Okay.
So, but eventually, yes, that will be a good place.
I mean,
for that.
basically Guiding Golden is the place to go for a deeper dive on
Pretty much most
virtually
things.
anything. But whether it's like up to the minute is another question. And our mayor has a
Just to
comment.
throw in, our next council meeting on Tuesday, so July 26th, is when we're talking about both of those topics.
Excellent.
Use of lodging tax, and I think if we have time, use of marijuana. That one might get pushed off a little bit, but that's going to be council's discussion on this, what you guys have done.
Okay, great.
Seven opinions.
Thank you.
Okay, moving on to enterprise funds. We have different types of enterprise funds that I will explain. Enterprise by nature is run like a business. So what the three funds there, the utility funds, they meet the definition of Tabor Enterprise Fund. And the reason why that's important is a Tabor enterprise where the fees for service, the revenue coming in, covers the cost of doing those functions and does not receive in any given year more than 10% subsidy. And so the only revenue sources for those funds are water-related revenues, wastewater and drainage fund, fees for service. In the water fund, we also charge if a business needs to tap into a hydrant for a construction project. We charge them for a hydrant meter and the water that they use and stuff like that. But those do not get any subsidies from the general fund. They do not get subsidies, federal grants, or anything like that exceeds 10% of the total revenue. The reason why that is so important is because for Tabor enterprise funds, Tabor allows for us to issue debt, water fund revenue, wastewater fund, drainage fund revenue bonds without going to the voters. And the key there is our water department, our public works, has an obligation to provide quality water that meets all the federal standards and all of that stuff to everybody. And if we need to issue $5 million of debt to make improvements to our storage tanks or our treatment facility or whatever, so that we can continue to maintain that water quality that we're required to do, if we had to go to the voters to do that and the voters said no, we shut down the water system. You know, what do we do? So there's a lot of things wrong with Tabor, but this is fortunately one thing that Doug Bruce got right, is the ability to do what we're legally required to do without having to take that extra step of trying to convince the voters that we have to do it. So that's the key aspect of Tabor enterprise funds.
How do we figure with these funds, other entities that we're serving, like say School of Mines? Do they pay fees into this, or?
Yes.
Okay.
Government entities, Jeffco, School of Mines, they don't pay, they're tax exempt. They don't pay property taxes to us, which is a whole different issue. But they're our water customers, and they have to pay for their water. They have to pay for the wastewater services we provide, and there's appropriate amount of storm drainage, because they are customers to that utility, and we're running it like a business, and nobody gets a free lunch on that one. Mm-hmm. Okay, going to the next slide. Now these, we run these operations also like a business. We maintain separate funds for them, but we are not required to do so. Because, well, for example, Fossil Trace Golf Course, it covers all of its own costs. It does not receive subsidies. We could designate it as a Tabor enterprise if we ever needed to issue golf course revenue bonds to make improvements to the golf course, replace the irrigation system, or do things like that. If, from a cash flow standpoint, we needed to issue debt, we could designate it a Tabor enterprise because it meets the definition, and then we could issue debt without going to the voters. The community center fund, for example, we run it like a business, but a significant portion of the revenue comes from subsidy from the general fund, which is normal. YMCAs and community centers and recreation centers that are government run all are subsidized in some fashion, whether it's through donations or whether it's through general fund transfers of tax dollars or whatever. If you wanted a truly self-sufficient recreation center, it would be called a private health club. So it's not unusual to be subsidized, but the reason why we run it as a separate fund is it makes it very clear and clean and easy to determine and to report how much we're subsidizing it. How much revenue that through programs and admissions the community center generates, what their cost recovery is for those things, and then how much subsidy is required to balance the operation. So it's more of a, use the buzzword of the day, transparency issue. This is very clean, very transparent, how the community center functions, what its expenditures are, what its revenue sources are, and what its subsidy is. Same thing, for example, for the museums. We could run the museums through the general fund, but for transparency's sake, it's a lot cleaner to run all of these operations in their own funds. Cemetery, over about the last 7 years now, has covered all of its cost and is building a pretty healthy reserve. Prior to that, the cemetery was being subsidized with general fund money and also interest earnings out of the cemetery perpetual care fund. And I've had some conversation with Rod that at some point, we need to have a long-term capital plan for the cemetery so that we can determine what the needs are and potentially look at repaying the cemetery perpetual care fund and potentially even the general fund for previous borrowings or previous subsidies from prior years, if the cemetery continues in its current level of operation where it is close to doubling, revenues are close to doubling expenditures in some cases. Yes, Cynthia?
What has changed in regards to the cemetery to allow that?
More people dying.
There are a few different things. Aging population is one, but one of the other things, and there's no studies or whatever to prove this, but once light rail opened, and the light rail go right past the cemetery, and we have those banners right along the tracks, and everybody sees it, just the exposure and free advertising, basically, I think has made some difference too.
More people wanting to be there.
Yes.
I think it's a beautiful setting.
Yes, because it is a beautiful setting. The other thing that's very interesting about, and we're going to get into a little bit of fee-for-service relationship or whatever, but because of some of the trends in how we deal with our deceased, columbariums are becoming incredibly popular. And so we have columbariums at the cemetery that are 4 or 5 levels high, and we have found that we price those the higher up on the columbarium, the more expensive, because people are willing to pay more and want their loved ones on that upper level so they have a great view.
A great view? Oh, my
But they want and they're willing to pay more for those upper levels of the columbariums. And so we price those appropriately because we're running this like a business. And it's still a reasonable fee relationship, but we price those accordingly. So we are still significantly less than private mortuaries or cemeteries, but we are charging reasonable fees for the service we are providing.
Okay, so, well, actually, I want to, because it's timely to what you were just saying, I want to point out, I mean, I was around talking with cemetery folk staff and staff when that light rail went in, and it was very intentional to put those banners up. I mean, we could have not done anything, but there was a lot of thought into what could we do, and so it's paying off.
Like the Fossil Trace Fund, it runs like a business. And I think that transfer out is debt service, right? The 700,000 or something like that?
Yes.
Okay. But it still looks about 300,000, at least last year it did. What happens to that?
Okay, so getting to that, historically, the golf course, after it paid repaid its debt obligation, because we issued sales and use tax revenue bonds to build the golf course.
Okay.
And then we set up a repayment schedule over time so that the golf course could repay the SUT fund for that debt obligation.
Okay.
Even though those bonds are already paid off, the golf course is still repaying
its portion.
Its portion, correct.
Okay.
So historically, the golf course would net in the neighborhood of $100,000 a year after all of its obligations. And then every 4 years, we would spend roughly $400,000 net to replace the golf cart fleet. And so it would be accumulate, draw it down to zero, in essence, accumulate, draw it down again. What happened with COVID is we, in 2020, did not hold tournaments. And on one hand, tournaments generate a lot of money because we charge extra and they spend a lot in the pro shop and all of that. But they also take away, reduce the number of tee times available on those days.
Higher paying tee times.
And so when tournaments got canceled and we didn't have tournaments because of COVID, that opened up the tee sheet, and golf was one of the few things that people could do because it was outdoors. And tee sheets were totally full. People were willing to pay extra to reserve tee times well in advance to make sure they were able to play, and all of those running like a business. And so in the last year or two, the golf course net profit at the end of the year has been greater, significantly greater than just the $100,000 a year in the past. Okay. There are still obligations, long-term capital needs, equipment-wise. Irrigation systems don't have an infinite useful life, and irrigation systems at a golf course are incredibly expensive. And so they will continue to accumulate reserves to be able to meet those future capital needs.
Okay, thanks.
Mm-hmm. Yeah, Peter?
This loss of water rights, how does that affect the golf course?
Unless something changes, it means the golf course is going to have to start paying for water to the water fund.
Yeah.
And it'll be non-potable water, so it will be cheaper than the treated water rate, but they're still probably going to have to pay for it, which is also going to have an impact on their expenditures and their bottom line.
Okay.
Karen?
I had a point to make on the cemetery operations fund. Way back, like in the late 80s or early 90s, the city offered cemetery plots at a significantly reduced rate in order to generate some funds. And so many people purchased a plot at a significantly reduced rate to help make up the difference so that the city wasn't having to support it quite as much. Plus, we also redid the little cemetery house, which made it a whole lot more palatable to go there and have the meeting about the cemetery, which was, it was a good thing to do that.
Very true. Okay. Internal service funds, as I mentioned before, we run those like a business as well, but the customer is the city of Golden itself and the various departments. And I'll use the fleet fund as the example as to why this is beneficial for the city. So the fleet fund has ownership of all city vehicles. All of our police cars, all of our parks and utility maintenance vehicles, the pickup trucks, the backhoes, the street sweepers, all of that stuff, the fleet fund owns and charges a monthly lease to the user departments for the vehicles that they use. So for example, if we take a police car is, let's just say $30,000 to buy a brand new police car and have it fitted with all the lights and sirens and everything that it needs. And the useful life of a police car is roughly 4 years. By the time they get the appropriate amount of miles on it, our fleet fund is going to want to trade in that vehicle or sell that vehicle at auction and buy a new police car and replace it. So the decision of when to replace a vehicle, what years of, life, mileage, maintenance, all of that stuff is subject to the fleet manager's decision. And it takes that decision away from the user department that says, oh, Ford has this new shiny police car, we want to replace our whole fleet. No, we're not going to do it that way. We're going to do it methodically and make the best business decisions on those. So we take the cost of the vehicle, we take our estimated trade-in value, we look at what we think the replacement cost 4 years from now of a new police car is going to be. We run the math on all that stuff, and we determine what the monthly lease amount is to the police department per vehicle. And then when 4 years expire and it's time to replace that vehicle, the fleet fund has money sitting in reserve ready to replace that vehicle. And part of the reason why that is important is it takes the budget decision away from council, because I've been in other cities and I've heard stories where departments go to council, well, we need 3 more police officers. Well, we need to replace our 5 parks and recreation pickup trucks, and there's only so much money. How many times do we think the council decides to replace the pickup trucks? It doesn't happen that way. So by setting this up with that lease, accumulate the funds, and then replace the equipment as needed, it's a very clean, easy process, and the decisions are made appropriately by the the best business case and so on. Same thing with the IT fund for replacing laptops and desktops and any other mobile devices and telephones and all of that stuff. We charge a monthly fee, it accumulates in the IT fund, and then IT is responsible for taking care of those things at the appropriate times. So that's how internal service funds work. Fiduciary, oh, sorry, Jim, go ahead.
Have we moved the fire department fleet over to the fleet management fund yet?
The big fire trucks, with the purchase of 2 fire trucks ago, as we buy those, because they're huge ticket items, historically we have paid for those out of the SUT fund. But that creates a significant bump every 2 to 3 years when it's time to replace a fire truck. It's a huge hit to the SUT fund. So beginning with 2 fire trucks ago, as we purchase those, they now become part of the fleet lease. So 20 years from now, roughly 18 years now, when it's time to replace that first one, the fleet fund is going to have the money in reserve. What that means, though, is it's a hit to the fire department budget in the general fund because their fleet lease is increased significantly because of how expensive fire trucks are. So it's the appropriate way to do it, but it's creating a hit to the general fund and to the fire department budget. Yeah.
IT, are those, is that purchased or is that all leased equipment?
We purchase it.
It's all purchased, yeah.
With the exception of the copiers, the multifunction printer copiers.
Ladders and everything else.
Because those things, technology improves so much, but,
Right.
but you buy a laptop or a desktop, and by the time you're ready to replace it in 3 or 4 years, it's obsolete anyway. So there's really no benefit to leasing them. Okay, fiduciary funds, cemetery perpetual care. The basis for that, anytime the cemetery provides any type of services or sells a plot or any of those things, we charge a perpetual care fee that goes into this fund, and the principal amounts of that fund cannot be touched, with the premise that when the cemetery is full and closed to new customers, there is enough money in the perpetual care fund to maintain that cemetery in perpetuity.
When's that gonna happen?
At this point, estimates are not for another 75 to 100 years.
We're safe.
We're all okay.
We're all gonna be,
Just gotta use those.
And then I know we've talked a little bit in the past here about the volunteer firefighter in lieu of pension. We have, we closed the volunteer firefighter pension back in 2011. And as we are now getting volunteers that are approaching that or have reached that 10 years of service where they would have otherwise qualified for a pension, we have set up and we contribute into this fund on an annual basis monies so that we can do something for those firefighters that achieve that 10 years or more of service in lieu of what they would have earned if they were still eligible for the pension. And so we hold that money in trust.
So why, curiously, if they're getting something anyway, why not still do the pension?
Because the pension is, one, it's very expensive. When you bring in 90 volunteers and you have 90 volunteers and most of them are under the age of 30 and you do the actuarial projections, the amount required to maintain that pension was getting very expensive when a lot of those volunteers don't stay more than 3 or 4 years until they get a paid job. But the actuarial study stuff, plus once money goes into that pension, even if the pension is grossly overfunded, that money stays there until the last pensioner or survivor passes away, and then there's nobody left to give money to.
Okay.
So,
This gives us more
so there could be, right now, there's like $3 million in that fund, and we're paying out $300,000 a year in pension benefits, and we're contributing in between our contribution and the state contribution about $250,000 a year, plus in good years when you earn 20% on those investments, it just keeps building, and what we're paying out is going to decrease over time.
Okay.
So that's part of why we closed the pension, just from a futuristic look of.
It wasn't to reduce what we're paying them, it was to manage it better. basically.
Correct. Okay, revenue sources, I'm going to go through this really quickly because we talked about it. We have taxes is, again, our main revenue source for governmental type activities. Go ahead, Alex. Our total sales tax rate here in Golden is 7.5. You've got state, you've got RTD and special districts, the Jefferson County open space tax, and the 3% City of Golden tax. Use tax, and we've talked about this in here before, use tax is supplemental and complementary to sales tax. It is basically if you bought something that is subject to sales tax and you never paid sales tax on it, it is subject to use tax. and I know I've talked about this before in here, that implies to individuals as well. So if you buy something out of state, out of online or whatever, and for some reason they don't charge you City of Golden tax, technically you owe 3% on that to the city. It is in our municipal code, in our sales tax code. It is not, I'm going to say, it is not heavily enforced, but technically you still owe it. So if you are that legalistic and you want to make sure you do the right thing and you're a true tax-abiding citizen, feel free to write us a check and say, I bought these things and didn't pay Golden tax. Here's my tax, and we will take it.
Wow.
But
But that's if they ship it to your house.
No.
no,
If you go there and bring it back.
if you buy something out of state and you don't pay a local sales tax
To them.
equivalent of 3% or more, and you come back here and you use it in your home here, it is subject to Golden tax because you are using it in Golden.
Well, but if
Even
you
like a
pay,
piece of art or whatever.
Yes.
that's how people went to jail
Guilty.
back in 2000.
So, it's happened to everybody. And like I said, we don't enforce it, but per the code, we could. We could go out, the state did this a few years ago where they started sending you something that says per records we've received or whatever, you've ordered these things online and you didn't pay state tax on them, you owe state tax. And so it's on the books, it's just not being enforced. So if you are in the mood for voluntary compliance, like I said, we will take your money. But that, when we talk about audits and we audit businesses, use tax is the major revenue source that we get through an audit. Most people do most retailers do sales tax right. Very rarely there's a glitch here or there where they exempted something they shouldn't have from sales tax. But the vast majority of the audit revenue we generate is through use tax.
But if you pay local where you buy it out of state, do you still have to pay it here when you bring it back?
If you paid a comparable municipal tax elsewhere.
Yeah.
So here, the state rate is 2.9%. Let's say you go to Minnesota and you buy something and their state rate is 6%, but they don't have a city rate.
Right.
You really have not paid a local municipal sales tax
But if you paid a local in Minnesota.
at
at a
3% or
comparable
more.
rate, you don't owe it here.
You wouldn't owe it here. If the municipal rate was 2%, wherever you bought something, arguably you owe 1% to Golden because you still haven't paid 3% or more of local tax.
Gotcha.
So, property taxes, the big thing here, and it's in the budget brochure that CBAC does that goes out, the biggest point here is the vast majority of property tax goes to the school district and to the county. Not near as much goes to the city. We can go through the whole calculation thing of actual value, assessed valuation times the mill levy and yada yada. But again, just be aware of the vast majority does not come to the city of Golden in property tax.
Jeff, I gotta leave and I apologize. Back on slide 4, there's a lot of compliance that's required. Who's responsible for compliance in the city of Golden? Are you responsible? You're the man, huh?
Everybody in finance department is responsible for doing things the right way, but the buck stops with me if we don't.
And what's the check on you?
The audit, the independent audit,
Yeah.
and our audit, especially the last 2 years, has been incredibly clean, which is Stephanie and our staff that are doing the day-to-day operations and maintaining the books and doing it right.
I made a big deal of it because compliance has always been a big issue in banking, and we had to deal with it pretty strongly. So.
Yeah, well, it's a big deal in local government too.
And of course, the audit goes to council.
Yes. So council is made aware, all of that good stuff. Okay, just a few other things, and we're gonna fly through the rest of this so we can, I promised Saoirse I'd be done by 9:30 with everything, so we're still okay on that.
Okay.
So our 22 budget for property tax is 9.1 million. That all goes into the general fund. Because of the assessment rates versus actual value, just an example for a $400,000 piece of property, a business, if it's a commercial property, they pay almost $10,000 in total property tax, $1,400 to the city. That same, residential property of $400,000, they only pay $2,400 in total property tax and a little over $350 to the city. So a huge disparity between commercial properties and residential properties in the overall property tax assessment process within Colorado. And that's per state statute and determining the assessment rates and all that fun stuff. Okay, keep going. In addition to taxes, we have charges for services for a lot of things across a lot of different funds of the city. Keep going, Alex. We also have intergovernmental revenues. The city receives cigarette tax money, road and bridge money from a portion of the county property tax, vehicle registration fees, lottery funds, highway users tax we talked about, county open space tax we talked about, fees and licenses, court fees, traffic fines, business licenses, sales tax license, construction permits, yada, yada, a lot of various things that we charge for. We also,
Before I
sorry,
forget,
go ahead, Dolly.
On the open space tax, who pays that? Or we pay it to ourselves?
It's part of the sales tax you pay. So you go to King Soopers, you buy something that's subject to state and county taxes. They charge, King Soopers collects it from you on your sale. They remit the county portion to the state as well as the state tax. The state ultimately remits it to Jeffco. Then Jeffco takes that county open space and they divvy out the appropriate amounts to the different cities within Jefferson County, and they keep a portion for themselves. So it's about a 3-month lag by the time from when you make the purchase until we get county open space tax.
And then that has to be used for open space?
Open space and trails and parks. Outdoor.
Oh, and parks, okay.
And parks is an acceptable use of open space money.
Okay, so like the DeLong Park,
Mhm.
open space started out because it was empty, and then it developed, and they still get to use it as open space money.
We can use open space money to build that park, yes.
Okay, thank you.
Uh-huh. Okay, and then we also get grants and donations from things. The last few years now, between CARES Act and ARPA, we've received quite a bit of money from the feds in that regard. Interest earnings, going back to your question about, what we do with our reserves. And then at various times we borrow. Sometimes we borrow from ourselves, and we borrow money from like general fund reserves to pay for something in the SUT fund that is otherwise we wouldn't be able to afford to do. And then over time, the SUT fund pays the general fund back if we do set up an internal borrowing. And then we also do external debt issuances, primarily certain leases, revenue bonds, and COPs. Karen?
Okay, so with the ARPA funds, $1 million was set aside from the ARPA funds for the possible help the people at the Golden Hills Mobile Home Park to possibly
Right.
purchase that. Can I have an update on that, or at a
That-
later time, or
At this
is it
point,
sitting there?
At this point, there is no opportunity for them to purchase it, subject to change. So the money, we have not spent any of our ARPA funds yet.
Okay.
So we have time to do that. We still have a few years to actually spend that money. But we have received all of it now. We received our second amount of a couple weeks ago. So we've now received both years of our ARPA fund distribution. We just haven't spent any of it yet.
Okay.
All right, Tabor I talked a little bit about. The city is what they call debruced, which means we are exempt from the revenue limitations of Tabor.
Good move.
And yes, that's been huge for us and our ability to do a lot of things because of the revenues that we've received above and beyond what would qualify under Tabor. There are still parts of Tabor that we are subject to, which is primarily the election provisions, multi-year obligations, tax increases, and non-Tabor enterprise debt issuances all have to go to the voters for approval, with the exception of like a copier lease. As long as we have what is called an annual appropriation clause, which basically says if council appropriates money for copiers on an annual basis, then instead of a 5-year copier lease, we in essence have 5 one-year leases subject to council's approval. Because it is ridiculous to go to another one of those, go to the voters and say, can we spend money for 5 years for copiers? And if the voters say no, what are we supposed to do? How do we make copies of stuff? So the legal, way back when Tabor first started, came up with here is an acceptable manner of doing a copier lease and still meeting the provisions of Tabor, because it's 5 one-year leases subject to annual appropriation. And that has worked well for those day-to-day operational type things within local government. And then last thing is just reporting. You guys know this as well as anybody. The various reports we issue, the sales tax report, quarterly interim reports, of which we're going to talk about, annual report, how we do our budgeting, all of that stuff. And that is a very broad, basic, relatively fast overview of how we do our finances, and hopefully that will give you a little more context as we now go into the annual report and second quarter financial report. Any other questions before we move on?
You're not going anywhere, are you?
Someday.
Not too soon.
Someday.
Better keep this guy on board.
We got a Colin Berry waiting.
Down on the basement.
Is that part of your? Is that part of the perks of being a city employee? Is that you get a free spot in the?
No. We might. No pun intended. Well, pun intended. We might get the resident rate.
Yeah. Good.
Okay. Anything else on that?
Thank you. Nicely done. Thank
Okay.
you.
Thank you.
Very helpful.
Thank you. Okay. Annual report. And one thing on your agenda that I was remiss in not correcting, it historically has been called the Comprehensive Annual Financial Report. Through an initiative by GFOA, the Government Finance Officers Association, it is now referred to as the Annual Comprehensive Financial Report because the acronym is a derogatory term in various parts of the world, especially in South Africa. And because of that, GFOA felt it was appropriate to change the wording, to change the acronym. I am still getting used to it after 35 years of calling it one thing. I forget sometimes that we need to switch it. So in the future, and it's easier for me just to refer to it as the annual report. The acronym now is ACFR. If you choose to go that route, you can certainly do that. But anyway, this is it. It's also online available if you have opportunity to look at it. At the last council meeting last week, our independent auditor was here, Jim Hinkle from Hinkle and Company, to present to City Council and report on the status of the audit and the opinion letter, we got a clean opinion. And what is even more, in my mind, remarkable, every time we get audited, and this is, you can go back indefinitely, auditors typically find mistakes. And their mistakes could be two different things. They could find something that we need to journal entry because it's material enough that we need to do the journal entry before we issue the annual report, so that change is reflected in the numbers. And then the other one they come up with is what they call a past adjustment, PASSED, which means they found something, it's not material enough that it would misstate the numbers, so they're passing on requiring us to make that adjustment. And for the second year in a row, we had no adjustments at all, either material or past. And that, again, is a reflection of Stephanie and our staff and the work they do day to day. So we got an incredible report from our auditors, and we will continue to do the best we can to comply with all the stuff we need to comply with and do all the stuff that I just talked about. Yeah, Saoirse.
So, actually want to invite you to make a comment. Chris said you're not going anywhere, right? I essentially said the same thing to you yesterday. And it's because, like when you come and talk to us and you provide this information to us, we are suitably impressed, and appropriately so, and grateful and confident. But I wanted to give you the opportunity to say, if in fact you did go somewhere, the processes are in place in your department to continue that same level of excellence. Is that not true?
That is the hope and the plan, and that is Stephanie's goal, and she would very much like to take over when I do retire, and who knows when that will be, unless somebody has a crystal ball and knows when the markets are going to improve and my 401 is going to get to a level I need it at, which it is not even close to right now. But yes, Stephanie is very capable, and I've been working with her and getting her involved in the stuff that I do, and helping her prepare for that day. And it won't be my decision, but I have all the confidence that she is ready to take over when that time comes.
And which is a sign of good leadership. But I just wanted to say that we can be confident that your department would be able to carry on that level of excellence, even if it wasn't headed by you.
I am confident that that is the case, yes.
Okay. And Peter?
Yeah, question. In other words, you have institutionalized a lot of these processes. So if you and or Stephanie both were to go away, there would still be the processes in place to kind of flywheel this through.
That is also the goal and the hope, and yes.
Okay.
I'd just add, in my past life, I had audited several governments, and it's really, when you said that about no adjustments, past adjustments, that's saying a lot.
That is huge.
That's very unusual. That's a real compliment to your team.
Yes, I agree. Thank you. The only other thing on the annual report, and there's a lot of schedules, a lot of numbers in here. You guys, hopefully most of you are numbers people or you wouldn't be here, but there are three things I encourage council and people who don't like to look at all the numbers to do on here. The first part of the introductory section is what we call the transmittal letter, and that is the letter from the city manager and myself to council talking about the year and various things there. It is also, some of it is kind of a promotional type of a thing for bondholders and people outside the city who read this, as hopefully a way for them to see how cool Golden is and all the things that we do, and maybe they want to come visit here. So it's written in that perspective as well. And then within the financial section, the first thing is the auditor's opinion letter, and you should read that so that you know what the auditors are saying. And then right after that is what's called the management discussion and analysis, or the MD&A, and that is a narrative comparison of what happened in the year compared to prior years. If things improved, an explanation of what significant changes are, either good or bad. If things improved or deteriorated, why. So it's a pretty comprehensive narrative that supports everything that's, all the numbers after that. So that's really all I have on this, if anybody has any questions. And we do still have a few of the hard copies of this, if anybody is so inclined to, but it's also available online. And it was also in the packet. Alex provided that for you in your packet.
On the finance department web or page of the city website.
Yes, on the finance page of the website. It was in your packet that you got last week for this meeting. Yeah, Peter.
Yeah, I want to say that the description of Golden was very well done. It was very complimentary to the city, and it was very up to date, and it read very well. So whoever
Appreciate
put
that.
that together did a really nice job.
That one I will take credit for, because I write the narrative. Stephanie puts all the numbers together, and I write the narratives.
All right.
Good job.
Well done.
Okay, second quarter financial report. Hopefully you've had a chance to look at that. Really no significant red flags of anything. I think probably one thing I will point out on page 1 of the table, which is the general fund. Just as a FYI, almost all of our general fund departments are below 50% expenditure halfway through the year. City attorney is one example where that is not the case. And part of that, I think, is given the change in city attorneys and their fee structure, and I believe they are asking or have asked for an increase in their hourly rates, and they have added more staff to meet city needs. So I fully expect that we will be significantly over budget in the city attorney line item, and they will be requesting, or we will be budgeting significantly more money in the future for legal services. So that's really the only thing out of the ordinary in the general fund. Most everything else is reasonable and appropriate where we're at year to date compared to budget, compared to last year. Really didn't have any significant red flags. So I'll just open it up for questions.
The city attorney, does that include our water attorney?
Legal fees related to water and water rights are in the water fund.
Okay.
Again, so that we keep all of those things business related in that checkbook.
Thank you.
I noticed finance is right on 50%.
So the interesting, and that's a great point, but the interesting thing there are certain things within the finance department expenditures that are skewed to the first half of the year. So for example, the senior refunds that we pay out, that budget is within the finance department budget, and all of those, like 99% of those, are paid out by the end of May, or definitely by the end of June. So a $65,000 budget item, we're basically 100% of that budget halfway through the year, but we're not going to spend any more. Similarly, on the property taxes that we get the vast majority of property taxes the first half of the year, and a couple other things from the county, but they charge us a treasurer's fee. And we account for those in the finance department budget. So again, almost 100% of that expense occurs in the first half of the year. So those are just a couple things why some numbers can be skewed. And that's why it's also appropriate not just to look at percentage of budget, but also look at this year compared to last year, and is that still, you know, a reasonable comparison, or is it out of whack? Kathy?
So it seems like the community center and Splash are still pretty much struggling. And I was curious if
Or
the
not.
city's considered something like leasing Splash to another entity or something like that.
Number one, Splash has actually had a very good month this year comparatively compared to the last 2 years because of COVID stuff. Temperatures Splash is almost totally driven by temperatures. With the exception of this year, it's somewhat also driven by lifeguard availability. But so far this year, its numbers are pretty close to pre-COVID. But we have over the years had conversations. How much should we be investing in an operation that's open less than 3 months out of the year? And that's, at this point, as a city and council, you know, still comfortable with continuing that operation. I would say that the community center has been slower to recover from COVID. I know I go there almost every day, and there were people that I saw there almost every day pre-COVID that I don't see at all anymore, and I've heard that some of them found a different place to go work out or whatever. But I know attendance is not at pre-COVID levels at the community center, but it's picking up significantly compared to where it was the last 2 years.
On the city attorney, is it both the hourly rate went up and the number of hours? Or is it?
Yeah, I think it's both. One of the things when you get a new attorney is the learning curve, and so they look at a lot more stuff because they need to know what we're doing and how we're doing it and why we're doing it, whereas when you have the prior attorney for 20, 30 years, the institutional knowledge is already there. So a lot of what they do faster, and the new attorneys will get there, but there is that learning curve on the front end. And so I believe that they are spending significantly more time on stuff than our prior attorneys would have, and that's, again, just because of the learning curve. Other things on second quarter financials? Hearing none.
I'm sorry, one thing.
Oh,
To your-
yep,
to your
no, that's
point-
fine.
To your point before, Fossil's doing very well through 6 months.
Yes.
And they're like, I mean, they could cover their debt fund already.
And-
Halfway through the year.
And July, August, September are prime golf months.
Yeah.
When you
Yeah.
look at January through April, anything you get's gravy because you never know what the weather is.
Right.
May through September is when you get pretty much 90% of your golf revenue.
Yeah, they're at almost 700,000.
So they're doing very well. And that's a tribute to the way they run their operation, and they look for ways to generate revenue within supply, demand, and all of that stuff.
But they're subject to the same requirement, though, as you said. They can't just charge whatever, I mean, there has to be a logic to what they charge,
And
as you started earlier.
And in the case of something like that, it's what the customer base is willing to pay. So for example,
It is demand supply.
it is. It's a demand supply thing. So for example, historically, in most cases, golf courses open up their tee sheet 7 days in advance. And so there's this mad rush to try and get, like this morning after midnight or at 7 a.m. or whenever they open their tee sheet, there's a mad rush to try and get a tee time for next Wednesday.
Right.
What Fossil Trace has done, and they've expanded it over time because we are a destination golf course and people from all over the world have come here to play golf. We get somebody from out of state or out of the country that says, I'm going to be in Colorado in June of 2023. and these dates, and I want to make sure I can play Fossil Trace. And what Jim and our staff have done is they have said, yeah, we'll get you a tee time for next June 5th or whatever, but it's going to cost you not only the prime rate, but also a premium of $25 per golfer to make a reservation that far in advance.
Wow.
And because they know they have a guaranteed tee time, they're willing to pay it. And it's a great business decision on our part because we make more revenue off of that tee time.
Sure.
And so we still maintain a certain number of tee times with that 7-day window, so people can do that. But for people who want to make sure they can play when they're going to be in town, we charge them a premium and they're happy to pay it.
So
If they weren't happy to pay it, you know, that's where the supply-demand thing comes in.
Is
And
that
that's-
a non-refundable?
If they give us sufficient notice, we would refund it because we want them to come back. We want to maintain good customers. And as long as we know that we can open up that tee time, we know we'll fill it. So there's no reason not to give them a refund, and then we just open it up and we fill it with somebody else.
But you hold some back.
But we
For the 1
hold,
week
we
period.
hold some back for that 1 week in advance. We hold a few back each day for residents only, so that we still have opportunity for residents to play. And Jim and his staff, again, they find a good balance of generating revenue, accommodating our local residents. And the last, I want to say for sure, the last 2 times we raised rates for green fees, we only raised them for county resident and non-resident, and we kept the resident rate the same. So again, we're trying to find that right balance of generating revenue, accommodating non-Golden residents that want to play there, but also being available and accessible to our Golden residents. And I think he's done a really good job from running this like a business. He has an incredible business mind to find that right balance and generate revenue for the golf
Who's
course.
the he?
Jim Hayek,
Okay.
our head pro.
That's what I thought, but I wanted to make sure. It was, that he's been there from the time they opened.
He started right about the same time I did, so he's
Wow.
going on 20 years.
Wow. Okay.
We're doing good on time. Anything else on the quarterly report? Okay, the last thing, and I do this annually, typically around this time, because I have to wait until our audit is final and last year's annual report is complete and approved by our auditors. And then I do this 5-year trend analysis. And in this case, it's for the years 2017 through 2021. I don't know how much you've had a chance to look at this and read some of the narrative, but the biggest thing, especially over the last few years with a trend analysis like this, is when significant events occur, it can skew your trends on a short-term basis. So, for example, in 2020, when COVID hit and certain things shut down and restrictions, all those things are in place, that changed certain trends, certain analysis in a negative way. And then as we come out of COVID and you're comparing 21 and especially, or 20, yeah, in this case 21, where sales tax came back fairly good, restaurants reopened up, certain other revenue sources came back a little bit. That now skews your 21 to 20 comparison because 20 was down and now 21 is up. So, you know, and that's why we do these things on a 5-year basis, so that it helps to take out just the focus on the 1-year anomaly. Let's look at the 5-year picture and see if there's a red flag trend versus just a potential red flag for 1 year out of the 5. And so as I went through this and ran the numbers and ran the graphs and looked at the trends, again, no real red flags over the 5-year period. Even some of the fluctuations I didn't think were that significant in the big scheme of things. I still caution through this report, the subsidies that the general fund provides primarily to the community center and the museums, they are significant dollars. I'm not saying it's not appropriate and that these aren't worthy causes for the money, but especially as we've heard a little bit and as we will continue to hear, when over the last year or so now we have added social issues as now potentially core government functions for our general fund, and we hear the push from the fire department that we need to hire more firefighters and be, improve our response times and have more of a paid staff. There are currently and future demands coming on the general fund in addition to the subsidies and the current operations. Inflation is going to impact wages. It impacts cost of supplies and services that we need. There's a lot of things coming down the pipe that's going to put demands on the general fund that eventually will take its toll. Right now, the general fund is sitting very well in reserves. Sales taxes, as you see every month, are way above expectations, but none of that stuff is going to last forever. And so I continue to point out that the amount of subsidies for some of our other operations, we just need to be aware of them. And on an annual basis, make a decision that, yes, we're still comfortable with those operations and the amount of subsidy that they need. So with that, same thing, questions on any of this?
Yeah, you're talking about the special functions that the city is taking on. Nationwide, some places are dispatching special groups for certain calls, mental health calls, I guess. Is Golden, and perhaps this is a question for our mayor, is Golden considering that and the budget implications?
Well, we do have a co-responder, and we are doing a full-time co-responder in the police department that is trained to deal with those things. And certain police officers are going through extended training to be in a better position to do that. I would not be surprised if not this coming budget cycle, but in the near future, that we look at a second co-responder. You can't have one position available 24/7 on mental health issues, and it's my understanding that most of the work of the co-responder is after the initial call and not on the initial call, which I was under the impression that the priority was, in a mental health case, the co-responder be the initial point of contact rather than uniformed police officers. And that's not what we're currently doing in a lot of cases. So if that continues to be a need and a priority, we will probably have to add more staff in that regard so that they're part of the initial response.
Right, I guess I'm referring to the cities that don't even send out a police response. They have two separate organizations, if you will, the mental health responders and the police responders, and I guess the dispatcher has to be involved in making decisions which group to send out. They're not co-responders.
And we're not there yet, but
Is that what we're heading, or-
it's very possible we may head that direction.
Okay, that was my question. Yeah.
That would be a DEFCON thing though, right? More Jefferson.
Well, the dispatch aspect of it is a Jeffcom thing, but the dispatch can't send out a separate mental health unit to a call in the city of Golden unless the city or the county has a separate mental health unit
Right.
to be sent.
Right.
So, Jeffcom would handle the analysis or the evaluation and the dispatching of something like that if and when we have that type of a response available.
That's putting a lot of reliance on the dispatcher to
Well,
make
some
that
cities
call.
are-
They're very highly trained in what they do.
I'm sure they are.
Well, in general, I mean, police response, community policing, community response, mental health response is evolving and will
Right.
continue to evolve.
Exactly.
You
And that,
spoke about some of that.
and that potentially means a lot more budget impact to the city.
Right.
Yeah.
So, we shall see.
But it has a budget impact, but, I mean, it's going to have a budget impact if we don't do it too, like, right? I mean, those kinds of, well, okay.
Yeah.
That's another conversation.
That,
All right.
yes, that really is.
Okay.
Trade-off.
Anything else on the trends?
Pretty good.
All right. I left you 10 minutes for city updates.
And Carla's not here. Are you here for city updates?
No, I'm just here observing, but I'm happy to update everybody if I
So
know it.
I'll start out.
Please.
Hopefully you've all heard by now that council selected Scott Vargo, who is currently the county administrator at Summit County, to be our next city manager. And the mayor may be able to give more detail, but my understanding is based on his employment contract with Summit County, he had to give them 2 months' notice. Council approved the contract on July 12th. 2 months later means his start date here is Monday, September 12th. Is that still accurate at this time?
That is still accurate at this time, yep.
And unless the county is willing to shorten that requirement of him, that's probably the soonest he would start here is September 12th. Other than that, most of our major projects are just progressing. If you look at council agendas, this coming meeting next week, there's conversation about Heart of Golden, Phase 1 of that project, and some of the other things on the strategic action plan are on council's agenda either next week or into August. So I would just encourage you to look at going into Guiding Golden or the city's website and look at the council agenda to see, what things are on the horizon coming forward in front of council. Yeah.
Did you, the finance team, do any sort of analysis on the Coors Tech from a revenue expense? When projects like that come before the city, and I know they're asking for vague, whatever variances, I'm not focused on that, just as a finance guy, did you look at that and say, I wonder what this is going to do from a tax revenue and what increased costs we might see over the next few years from a cost and revenue point of view? It could be profitable,
I haven't really done much of a look at that yet because part of it is just dependent upon the timing of when they're going to do certain things.
Right.
And, just because they have zoning for something, until you have a better idea of what they're actually planning to put in there, how that affects our sales tax base, for example.
Okay.
If they put in another liquor store, that's not really going to add sales tax because it just means a redistribution of where people buy their alcohol.
You don't think people buy more? I'm just kidding.
So I thought about.
But, if a business goes in there that's more of a new destination or something that we currently don't offer in Golden, then that has an impact on our sales tax base.
Okay.
If it's just another of something we already have, it more just redistributes who gets the revenue, but we generally get the same tax.
Okay.
On that. So one other thing as it relates to city update calendar, since you mentioned Coors Tech, we had talked about at some point having Rick Murby come in and talk about the Coors Tech redevelopment. I'm going to try and get him to come next month. Seems like it would be a good time to have that update.
Yeah.
So we'll see if he's available next month.
Great. Peter? Alex?
Go ahead, Alex.
Just have a quick ask of CDAC. So Jim mentioned it earlier, but every year the city manager's office has a grant program to allocate contributions to local nonprofits. As per tradition, we have members of CDAC who are interested in reviewing these applications and recommending allocations accordingly. So if you're interested in doing some grant review and recommendations, please let me know. I'll send you the material, and it would be much appreciated.
And in the past, Bethany, you've done that, and who else?
Well, I brought the group together. Peter's done it, but I don't know if you're.
Yeah, my contribution is limited. Bethany,
Karen.
others are more closely involved, and so.
It's more, yeah.
Sandy Curran has
Right.
been involved.
Right.
Ed,
So folks need to let Alex know if you're interested in serving in that capacity.
And we ought to bless him.
Yeah.
I mean, it should be on
you
record.
and me and Ed.
It's
Did you get
typically 3 people, correct?
Right.
Okay,
In the
did you
past.
get that?
We've had more.
Have you?
I mean,
Okay.
In the past, we've had,
If you want to look at things, by all means.
yeah,
otherwise,
DEA and that's been involved.
So Alex, do you have what you need?
I have a report.
Say what?
I have a report. I'll be able to listen to you.
Okay.
Citizens.
All right.
Okay, we have Bethany, Ed, and Karen,
Bill.
and Bill. Okay,
Okay, excellent, thank you.
Perfect.
Anything else? Do you have anything you want to add?
No, I would just, you guys, this is great. Happy to be able to come. It's been a couple years. But there are some things, as I mentioned before, on our next agenda that council will be talking about for, the first time in a little bit in more detail, and that is uses of the lodging tax, the marijuana tax again, and we have a lot on the agenda. So I think that'll stay on the agenda. It might get bumped because we're not collecting it yet, so we have a little bit more time. The couple of other things is council provides some direction on proposal for arts and culture, and that will be a many-step process, but we'll be talking about that. And from our sustainability board and department, fleet electrification plan, which we've been waiting for, and certainly as Jeff was talking about the fleet management fund and how we manage our fleet electrification plan, and the solar farm. There's some recommendations around that. So there's always a lot of things to talk about at council, but those in particular have been conversations. They've gone to voters. They've been large topics, and we'll be taking that next step of conversation on Tuesday.
Karen?
I was just going to say the co-responder and the homeless navigator positions are really critical to what's going on right now in the city. Terribly critical. Unfortunately, lots of the need occurs outside of normal business hours. And for instance, the time of day when you can figure out where you have a homeless person residing seems to be, well before 8 a.m. And also domestic abuse things usually happen in the evening after work hours, when somebody stopped for a few beers and then gets home, and then there's an uproar. And I can see that we're going to need to have more people involved in this, simply because of the timing of, who's on call to perhaps meet the need that is there. So just something to think about in the future. Not that we're ever going to be able to cover 24/7, but it's going to be a need. And just like firefighters, having more paid firefighters is going to be a need, and more creek patrol is going to be a need. So just throwing that out there, because what I see is occurring other than the 9 to 5 or 8 to 4 shift.
Can I just, in case, I'm sure you all are aware, but nationally the 988 number rolled out, and it's related in terms of mental health crisis. Instead of going to 911, our JEFCOM, 988 is going to go to a different resource. So
What is that resource?
It'll be very interesting to see how that is happening within our county and state.
I don't know where.
Typically in the state of Colorado, we've had a crisis 1-800 number crisis hotline that's existed, and so those resources, Jefferson County Mental Health has been our county sort of local provider and resource. But with this new way to get there, so the 1-800 number, it may and likely will increase the volume of calls because you don't have to remember some number. It's easy to access, so I'm sure we'll all be watching that. And where that has always been county, just like other things that Jeff was mentioning, how much of that then filters to us as a city and the city responsibility and resource need. I don't think anybody knows yet, but it's also needed.
Yes.
Quick question, marijuana locations, have they been decided upon?
There are 7 areas of the city that are zoned commercial that have been identified as potential locations.
But no locations have been chosen?
Not that I'm aware of. I know there's been interest from businesses reaching out to the city. I don't believe any permits have actually been issued. But I think that's all still in the process, the permit process.
I just had a quick one. Were you, considering it was a modest lodging tax and how long it took to get that, were you surprised at the amount of money that was gained this year? I mean, I was.
No, I wasn't. I think for a number of reasons, the lodging industry has bounced back. People are traveling again, and there's pent-up demand. So, we certainly are seeing a lot of travelers. The other reason why some years back we approved, and I was very happy that we did this back then, the definition of short-term lodging and what lodging tax would apply to. And over those years, we've seen an increase in those short-term rentals, whether it's Vrbo or Airbnb. We also have short-term campground rentals within the city limits. And so by defining what it is, it's not just hotels. We have a lot more lodging in the city than perhaps people realized when we first started talking about lodging tax 10 plus years ago. Everybody was just thinking it was those hotels, those commercial, which of course we have more of those now than we used to, but lodging is a lot of different things and it's bigger than most people think. So yeah, I think when we talked about the 6%, we were talking about like 1.5 million based on old lodging numbers of how many people were staying, but I think post-COVID and all of that, the fact that it's higher, it didn't surprise me.
Good. Yeah, I was pleasantly surprised, I can just tell you that.
Yeah.
Okay, we're just slightly past our 9:30 time.
Quick, make a motion.
We're adjourned.
Accountants, interesting.